The news day continues here on One News Now. I'm Dani Laurel. President Bongbong Marcos has signed an executive order adopting a development blueprint aimed at bringing the Philippines back to a high-growth trajectory. Executive Order Number 14 directs all concerned government agencies to adopt and implement the Philippine Development Plan or PDP 2023 to 2028. Now, speaking at the PDP forum, President Marcos said the blueprint will help the country achieve its goal of becoming an upper middle income economy by the year 2025. The Philippines is currently classified by the World Bank as a lower middle income country.
It is a plan that will set the Philippines towards becoming an upper middle income country by the year 2025. But beyond economic development, the plan also focuses on social development and protection, disaster resilience, digital transformation, and many other things. Every part of society must be part of this transformation.
Meanwhile, the government is considering taxing nickel ore exports to follow Indonesia's success. Environment Secretary Antonia Yulo Loizaga told Bloomberg that the Philippines wants to move out from being just part of the supply chain and become a part of the value chain instead. But she admits that without facilities to process mineral ore, the country will just be a vendor country. Secretary Yulo Loizaga says she does not want the Philippines to be a vendor country. And to boost investments in processing facilities, the Secretary says there is a range of actions being considered, including taxing the exports. Indonesia and the Philippines are the world's biggest suppliers of nickel, which is used in making stainless steel and a key component in batteries for electric vehicles. And here to discuss more about what that means for our mining stocks, we have with us Restine Mercado, Research Director over at China Bank Securities. Good morning, Restine.
Good morning, Dan. Thanks for having me.
All right, Restina, if you take a look at how the miners are opening now, I mean the counter now, which includes not just nickel but also some oil players there, so a bit of a mixed picture, but nevertheless it's down by more than 2 2/10%. Tell us, is this a reaction to this possible export taxation, and is this the time for us to be taxing the exports on nickel?
I think, of course, you have that reaction, and coupled with there's some weakness in sentiment right now. Over the long term, of course, this is a good thing for your nickel companies, but of course, there are considerations, right? So, specifically for processing, and the government is concerned about this, or they're cognizant, is that you need the infrastructure or the facilities in place, right? So, if you smelt, then you need higher power requirements. So, that's actually possibly a constraint, right? Considering that our power outlook is that it's tight. And then there's also the investment consideration. You have a lot of small miners, and processing facilities could prove to be expensive for them. So what will the government do in terms of providing financial and infrastructure support? And will there be any subsidies involved, hopefully coming from the tax that they're looking to impose?
Okay, are there any stocks in the mining counter that we should be looking out for? Some stocks to watch here that you believe might either benefit or, feel more pain than other stocks?
I think, first, in terms of feeling more pain in the short term, because there might be some impact on demand, right? You have your listed ones, you have Nickel Asia, you also have Ferronickel, and then also you have Mark Venture. So those are listed mining companies. You might see some negative price action in the short term as investors react to this development. But over the longer term, once that value add trickles in and everything's in place, then that should be a longer term good for all of those companies.
Restine, what's your outlook on commodities in general, given the global growth slowdown? But again, with the juxtaposition of China reopening, hopefully, where we do export a lot and where they're creating EV or electric vehicles, which do need the nickel, is this something that you're seeing it will be a better year for our miners or commodities in general?
I think, of course, commodities in general, so I think it's split into two, right? So one is your metals, your basic metals. Those have been moving higher over the past month, and that's mainly driven by the expectations of China reopening, having more demand from them. So that's moving up your copper and your nickel prices. So I think generally those could continue to see some demand. So possibly higher prices just because you're seeing China come back online, even against a backdrop of global growth slowing down. In terms of your other commodity prices, like your natural gas and coal, those have been coming down so that's a good thing because that means that energy costs would kind of stabilize for this year.
Okay, let's move on to the index and how we're seeing it move this morning. Yesterday, we saw the biggest slump in 6 weeks. Is this, a one-off thing due to the fact that there was, of course, a shifting in the index in the 30 stocks? You've got RLC and Mega World taken out, and they were some of the worst performers as well. But you did have Union Bank and DMCI coming in, or is this a story of profit taking as we're now approaching 6,800 levels?
So I think it's a mix of both, right? So on the index movements, so you had Union Bank coming in and DMC, of course. But remember, a lot of the movement in the index constituents has a lot to do with past price action, right? And we all know that property companies have been taking a beating over the past couple of years because of the outlook there, but that seems to be improving already. Union Bank, of course, enjoyed flows because of their City Consumer Biz acquisition last year, and then DMC because of the windfall from Semirara. So, given how our companies are changing in terms of recovery, we might still see some movements in index constituents over the next review session. So there's that, right? But on the other side of things, there's also that weakness in sentiment. I think the problem with where we were over the past 2 weeks was that it was taking too long. I think a lot of people were expecting another leg of the rally moving up beyond 7-1, and that didn't materialize. So there was that kind of spent up selling pressure there that wanted to sell when the market rallied. So I think
why didn't that materialize, Rustin? We were hoping that would break the resistance levels like you mentioned from 7-1, 7-2. What happened specifically that made investors pull back?
I think it's a lot of one, you're heading into the central bank meetings of the US and the Europe, right? So there might be some risk-off sentiment there, but also possibly a lack of positive catalysts over the near term. You're heading into earnings season, so that has been mixed for the US. For the Philippines, generally, hopefully, we're expecting more upbeat earnings for this year, but for fourth quarter. But generally speaking, a lot of investors are now moving from the concern in terms of fund flow from central bank tightening now into actual growth concerns, right? The US, I think earnings estimates are still high. They haven't really come down. So that kind of reality check for them might move some investor risk appetite towards the more conservative route.
Okay, give us more color on what you're expecting or what we should be expecting in terms of fourth quarter earnings or full year earnings that are coming out. We had Union Bank come out yesterday. Some are saying, our analysts are saying that was lower than what was expected here. What kind of earnings are being priced in by investors now?
I think generally the expectation is upbeat, right? You had GDP and outperforming expectations, so that is kind of a barometer of how your corporates perform. So generally, we're expecting strength broadly, but of course, it's going to be mixed across the different sectors and of course the different companies. I think for Union Bank, they did have that large consumer business coming in the second half, so the print in the second half may have been due to higher provision. So still not much details, but in terms of broadly speaking across companies, we're pretty optimistic that the numbers will still be good for the fourth quarter.
Okay, comments on the property sector, because like you mentioned, these were the two big property players that were taken out of the index because of possibly thin trading compared to other stocks last year. Will this affect those stocks in terms of trading because they might be less visible to foreign investors, for example, or is this actually the time to be buying in when they're being sold off?
I think it's a good idea to be looking at them and buying in, right? The movement out of the index has more to do with fund flow. So those that track the index have to sell those positions in of course, to favor Union Bank and DMC. But I think right now where those two stocks are trading at, they're kind of at a deep discount compared to historical valuation. So again, once that fund flow, the sentiment, the negativity is priced in by the market, that could be a good sign to be buying in at low prices. And then eventually, since right now investors are still focused on value versus growth, they'll see that disparity and then they'll be looking into getting into those positions. So hopefully that leads to a mean reversion. So hopefully back a good 10, 15, 20% upside at least after the bounce. But again, I think in terms of the whole sector, progressively, it's improving. The outlook is for improvement. You had the leasing part continuing to be strong. I think for the fourth quarter, that had continued to be strong. And then for residential, that has also improved because last year we had problems when it came to cancellations, right? So this year, less of a risk. So hopefully more steady gains for their profitability moving forward.
Okay, finally, Upson, no, which might be pushing through with its 5 billion peso IPO. That is, they're looking to price that on February 28th, so in just a few weeks here. And that's, of course, targeted to list on March 16. Tell us, what is the rationale of going into the markets, tapping equity markets at this time? Is this a good idea? And how do you believe that stock will be performing once it debuts?
I think right now is actually a sweet spot for raising equities, just in the sense that you have interest rates kind of leveling off, right? So if you raise equity and then borrow right after to fund your expansion, then you're effectively kind of maximizing the opportunity of relatively better rates, at least the first half or the rest of the year versus last year, right? So good sign, and you have a robust pipeline already for the first half. Right. So I think all in all good. In terms of Upson specifically, it is still a consumer discretionary company, right? So of course, IPOs like these usually there's a growth story built into valuations. So it might appear expensive at first glance, and of course that's because they have growth stories that are pretty lofty. So how they deliver, and if they deliver on those on that will be the main focus. But I think right now investors are a little bit more cautious. So in terms of valuations, they might not be willing to go as high as where previous IPOs were at, right? So there's that. I think generally the upbeat outlook in terms of public offerings for this year is warranted. You do have that appetite back here in the country. You have foreign funds starting the year strong. So hopefully that interest carries over to those IPOs.
All right. And finally, stock pick for our viewers here today?
Yeah, I think right now the stronger ones are, of course, your banking stocks. So like BDO, BPI, Metrobank, those have remained generally resilient versus yesterday's sell-off, right? So I think that will continue, and that's the clear beneficiary heading into this year. Another sector to be looking at is property. Of course, you do have some that are trading at really multi-year low valuation, so that could be a place where you could find some tactical trades. And then apart from that, of course, energy, considering that they're moving past the challenges from last year.
All right, good stock picks there for our viewers here. Thank you so much, Racine Mercado of China Bank Securities.
Thank you. Thanks for having me.
For more updates, visit News 5, The Philippine Star, and Business World Online, or visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com, and stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.